Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free video report for Wednesday, July 20th, 2016. Hope you guys are having a fantastic week. So I want to clear the air here because we've been getting emails about, and these are from non-members saying that, you know, Woody's wrong on his black hole. Is he? How can he call for a black hole when we're making new highs? And my response back to these people is, how do you have any idea if he's wrong or not? If you don't know when the dates are, I try to give you as much information as I can in these free reports. But we're a for-profit company here, and we have people, a lot of people, that are paying us $150 a month for the exact dates, for when the black hole is going to hit, for seeing where sentiment is at, because that is, you know, what is going to be driving the market. So I can only give you a certain amount in here, and if you're trying to assume something from what I'm saying in here, you're actually running blind, because I'm not giving you all the information that you need to make trades. I'm just giving you some perspective of what I see and giving you some clues about what's taking place in our reports and what's going through Woody's mind. So one thing is that the market can't have any type of serious correction until the majority are bullish. And if you think about it, how can it move lower if everybody's expecting it and positioned for it to move lower? If they're already positioned for it, they already sold everything, so the market wouldn't be going up. And the same holds true with market bottoms. They're not going to find a real low until everybody capitulates. And to make real money in this market, and just instead of jumping in when we're having a breakout and then hoping that we're going to 2250 or 2300 like 99% of the newsletters are calling for right now, I would say this is that they were all looking for 2150 here, and then when we were down here, they were saying that don't buy until you see the S&P go to 1500. Then when we rallied back up here, it was back on to 2150 again. Then when it was down here, we're in a bear market, don't go near this market. And now we're back up here, and now everybody's bullish again. But every one of these things, they were predicted when these drops were coming. So it is coming soon. And, you're always going to have sentiment extremes that are going to be seen before major trend reversals. So this is just going back to the September 9th, 2014, which was the first black hole. Notice how everybody's bullish. Everybody was bullish here. When the market was going up, we had bullish. Then once we got a drop, then everybody turned bearish again. So you can see they got bearish at the wrong times. They got bullish at the wrong times. And you can see right here, this was right before we had the black hole crash, and everybody was looking, they were actually starting to call the 2150 at these levels here. And you can see we had 94% bullish, 92, 91. The majority was bullish on this market. And from there, we saw the S&P drop 200 points in about 19 days. So once the market is in this thrill, the way that I work this is like this. When we're in the capitulation, this is where, I'm covering my short positions right here. And once we start getting into the despondency and the depression here, this is when I start looking for a low. And I'm going to wait, and it may not be exactly at the low, but I know time-wise it's supposed to be happening. Then when it does find it and it starts going up, once we get into the thrill area, I'm now covering these longs that I took from down here up at these levels, and from there I move to cash, and when we get into the euphoria, I start building a short position. And it may not be the exact top when I start my first position, but that's why I layer in. And I just know that time is on my side with it, because we're at this euphoric phase and everybody is bullish. And when everybody's bullish, the market is going to drop. It's just the way things are. And if you're, your institutions are really trading the same way. Once we're up at these levels here, they're building short positions, and they're being very patient. If the market moves up, they add another short position. If it moves up the next day, they keep adding it until it drops. And then once it gets into these levels, they start buying, and they're front running these actual trend reversals, and that's really what you have to do. Otherwise, you're going to be getting in and out basically at the same spot, because you're going to be bearish at the wrong levels, and then you're not going to get bullish until we start taking out certain resistance levels, and it's usually a net. You're moving maybe 100 points on the S&P, but 100 points in the S&P in 2 to 3 years is not something that's too good. So you have to be anticipating these moves and positioning your portfolio. So this is just an example of how I do it. So capitulation here, this was the Brexit, and this is just a smaller version of things, but this is where I cover my shorts and I start looking for a long. We had a gap up, get long. And now we are in the thrill phase of things. I moved to cash. We are now getting into the euphoria, and I'm building a short position. And it's just the way that I do it. We have bearish divergences. We know sentiment is already at extreme bullish levels, so everything is in line for a drop. This is the intermediate term sentiment that Woody Dorsey pulls out. This was the last previous high of all-time sentiment, and you can see we blew through it. And if you bought, and if you notice here, it was started declining as the S&P was rallying, and it was a sentiment divergence. Well, we have the same thing going on right now. And again, is it a good time to be buying? The previous times, no, it hasn't. So, what Woody has said is that the near term remains, say, strange and tricky, and stocks have become more and more vulnerable for a reversal, as noted weeks ago. We've been saying this. The potential remains for we've been saying this through the beginning of July, was that a potential remains for recovery high into, and I can't give you these dates, only to fall into another declining phase. A black hole environment remains due into, and we have these dates. So again, you don't know if they're wrong because you don't know when the dates are if you're not a member. So that's my point that I was trying to make before. But anyway, if we take a look at our short-term sentiment here, take a look at all these bullish sentiment readings. Remember, this market can't go down until the majority is on the bullish side. We're starting to get that right now, and we've been seeing it, and we know that we have bearish divergences, and if we look at what the institutions are doing, they've been selling every one of these big rallies. So remember what I was showing you. When they're up here, institutions are shorting. When they're down here, they're buying, and you can see it in the money flow. Every time the total money flow minus 74.83, block trades minus 58.38. So they're selling these rallies, and if we just take a look at our regular charts here, you can see very overextended bearish divergences, and we're still trading within the same pattern right here. And like I said, this was the first black hole that was called, and it looks identical. Does it mean that we have to turn tomorrow? It might. It would make perfect sense. It may drag on for another week. It may drag on for another 2 weeks. This is where I let Woody Dorsey's been doing this for over 40 years. I'm not gonna try to outsmart him. He knows what's going on, so I listen to what he says. So that this pattern right here is extremely bearish because it's a megaphone top, just like we had here before we had the big drop and then back up again. And if you look at at just a 60-minute chart, if we just do a 50% retracement, we're talking almost 100 points to the downside. This market hasn't seen a 100-point decline in over a month. So they're not prepared for it right here. So we have bearish divergences. We know sentiment is at extremes. We know institutions are selling. And what you have to do is just be patient and take days that are up, and I build a short position. But don't think you know what's going on through these free reports that I do, because you don't. I'm only giving you a little piece of information. So if you really want to find out what's going on, we're having a special. $199 for the first 2 months, and anybody that subscribes is getting a free membership to Markets Path. I do video reports every night, morning notes, email, trade alerts, and we also have a trade room that you could join in. So until next week, have a great week of trading and be safe.